Good day, and welcome to United Ranso's Weekly Wraps. I am Vav Govender. This week we're going to cover the great year that the South African stock market has been having. Then we'll look at the currency moving past 17 to the US dollar. And finally, in our AI segment, we're going to take a bit of a look at the Chinese chip sector. It's kind of in the news at the moment with the listing of more threads in China. So let's start off with the South African stock market. This year, South Africa's stock market, as I speak, is up about 50+%, it's about 51% or so year to date in US dollars. This is a very good performance, and in fact, there's only a couple of countries in the world, Brazil and Spain, that have better markets. And the best performing market in the world is 64%, so not that far away from our 51% or so. Obviously, what's been driving this is largely the precious metal sector. We've seen a really big boost up in the gold price. Gold has gone up to $4,200+ an ounce, and it was closer to just below $2,800 at the start of the year. So we're talking just in excess of a 50% increase in the price of gold. Obviously, the way miners work, they have a fixed cost. So let's just say they have $1,000 cost production, and they're making $2,800. They make $1,800 profit. If it goes to $4,200, they're making $1,400 more as a profit. You add those two things together, you get something from $1,800 or $1,008 to $3,002 in profit. That's quite a substantial increase, more than you would see just by a 50% price increase. The profit increase is larger, and therefore we've seen some of us, gold miners do really well, more than doubling in a year. And also, because gold is a substitute in certain areas for platinum, platinum can be used for jewelry like gold is. If the price of gold rises enough, eventually platinum will follow a bit. And the platinum price has also risen up to a certain extent because of the rise in gold. Younger people may not realize this or forget this, but platinum is historically more valuable than gold. It's only in the last several years that we've seen platinum as cheap as relative to gold, and in fact, still it is less than half the price of gold at the moment, which is a very unusual aspect. Like I said, it's usually more valuable than gold, and that's why, for instance, you see in you have records. You have platinum records as being bigger than gold records in terms of the sales. So that is one more thing to be looked at here, is the platinum price has also increased substantially. We are the world's largest producer of platinum, so our mines like Impala, etc., have risen quite nicely on this news, and that's one of also big drivers that we've seen come through with regards to the market. The rest of the market has done a bit better. We have seen a bit of a recovery in some of the other stocks we have in the market. It's been a better period generally for South Africa. Sometimes people inside a country don't see the positive change in the country as well as outsiders may. So let's just go through some of the things that we've seen South Africa improve on. So just off the bat, load shedding has improved significantly. You know that for a fact because you can see how often electricity is off nowadays versus how much it used to be a couple of years ago. We went from basically electricity being off effectively, every day, multiple times a day, to almost no load shedding at all at the moment. In fact, it's just got more load shifting where it does affect people at the moment, and there's more to do with things like cable theft, etc., and anything else. So that is obviously one big improvement. We've also, for people that don't realize, have seen a big improvement in Transnet as well. So that's also being solved. So you look at those two factors, Transnet and Eskom, getting a better result out there. That's going to result in much better, much greater ease of doing business than in other parts or previously. So that's one improvement. The next thing is, of course, we've seen things like, for instance, we are off the grey list in terms of our ability to do business internationally. So there has been improvement there. We are seeing our credit rating improve. It was S&P brought us up just recently. We're still a couple of notches below investment grade, but an improvement is an improvement. We have seen a slight tick up in GDP growth numbers. Not a lot, but there's a slight tick up there. There is signs that we might even be seeing a bit of improvement coming through in employment numbers, which is obviously another big positive out there. The government does seem to be operating a bit better than it was a few years ago, for whatever reason. People can say the GNU, people can say other things. For whatever reason, we are seeing an improvement in the government's performance. And we are also, and the big thing I think in financial circles has been the new target for our inflation target of 3% with 1% either way. So it's effectively a 2 to 4% target as opposed to a 3 to 6% target. Longer term, it's going to be very positive for the country. It's going to mean that it's going to be cheaper to borrow money to do things. It's going to mean the cost of debt in South Africa is going to be a lot lower. It creates more stability as well. I mean, when you have a higher target, there's more variation allowed. A lower target usually comes with lower variation. And so there's probably going to be more certainty around currency, around the inflation rate, and therefore it's going to be positive for investment going forward. And South Africa at the moment still has a lot of opportunity. I mean, you look at some of the pricing of, for instance, our banks, it's amazingly cheap. If we are going to see the country recover to any reasonable extent, we still have quite a bit of opportunity here. But speaking of the main driver, like I talked about, the gold and platinum stocks, what is driving gold? Well, there's a number of things that are driving gold at the moment. Primarily, I think it's the fear around fiat currencies, especially what's been happening in the US dollar. And I think that's going to continue into the next year. I've talked about this in the past, but just to reiterate, Donald Trump's first term, he brought in a lot of people that were Republicans, but not his Republicans. They were part of the party. They were, people with like significant qualifications, etc. Not much different from what a normal president would have brought in, a normal Republican president would have brought in. In his second term, he's not done that. He's brought in people that are his Republicans, people like Kash Patel, people like Pete Hegseth, people that are much more in their post based on loyalty than any kind of ability. Pete Hegseth, for instance, in recent years was a news anchor, a news host, a TV host. Yes, he was in the military. Yes, he was not like a general private or something, but he was not a general. He was not a high ranking officer. I believe his highest thing was a major. So he's not quite a private or a corporal or something, or a sergeant, but he's not a general, not the normal kind of person you put in charge of the U.S. Defense Force. Kash Patel, if there's a funny book he wrote about Donald Trump, a children's book, which you can read, is the most sycophantic thing you're ever going to read, and he's in charge of the FBI. So next year when he replaces Jerome Powell, the kind of person that he's going to bring in is the kind of person who's likely to be more of a Kash Patel or a Pete Hegseth, as opposed to some of the people he's brought in the past, who have been more traditional establishment figures. What does this mean? Well, Trump, we know, wants to have low interest rates. That's just one of the things he wants. Why? He measures the stock market as a measure of success. He uses short-term GDP numbers as a measure of success. Both those things will improve with lower interest rates. Longer term, it will cause problems, especially if it's low interest rates in an inappropriate time when you have inflation coming through, weakening of the currency, etc. But in the short term, it is a bit of a juicing up of the economy. And so we expect next year him to bring somebody in that's going to be much more willing to cut interest rates, even when the data doesn't require it. That's going to be negative for the dollar, positive for gold, positive for platinum, positive for the rand, positive for South Africa. Speaking of the rand has broken through 17 to the US dollar. As I speak to you, it's sitting at about 16.93 to the US dollar. This is a pretty strong level, stronger than it's been for quite some time. But can it continue? Like I said, the US dollar might be weakening going forward, something we have to be aware of, something that we have to take into account. It's not just about the economics, it's also about the politics involved. And the politics are pretty clear that we are going to get a person in charge of the US Fed that is going to be less concerned about the value of the dollar than previous US Fed chairs have been. What impact would that have on our economy? We are, to a certain extent, net importers of a number of very important things. Number one is things like, for instance, petroleum, petrol, products, diesel, etc. comes from petroleum. You bring down the price of imports because the rand is stronger, you're going to bring down inflation. In addition to that, a lot of capital goods are important to South Africa. We tend to sell raw materials and import a lot of capital goods. The capital goods are going to be cheaper, which is going to be probably positive for international growth, so long-term growth. Commodity prices are determined internationally, and right now commodity prices, especially things we export, seems to be supported, quite nicely by, like I said, what's been happening in the US and elsewhere. And so I think it's a relatively positive, sign for South Africa going forward, that we are going to be seeing what we are seeing with regards to the rand and so on. So I do think the rand is probably going to maintain some strength going forward. And I would expect that, we'll probably be seeing closer to the, say, for instance, the 17 level than we, for instance, to the 19 level in the next year or so. This is one of those famous things where, at the end of next year, someone, post this little, blurb when the rand is at 25 to the US dollar. But you never know what the future holds. But right now, it does indicate that we are probably going to see a stronger currency next year than many people anticipate. Now, one more thing before I go on. The rand doesn't often stay at what we think is fair value. it's often significantly overvalued and also often significantly undervalued versus what it should be. At about 17, it's probably at the high end of valuations, but probably not overvalued just yet. We could easily see it stay at a place that's overvalued, maybe like the 16s and so on, for a significant period of time. And the argument is if we get the inflation rate down to 3%, then the assumptions we have about how the rand weakens over time. So, for instance, from 1995 to about this year, the rand has weakened roughly about 6% a year every year. That 6% is partly due, at least, to the inflation differential between South Africa and the US. If we bring our target inflation rate down to 3%, we will not see a 6% weakening every year of the rand versus the dollar. This doesn't happen when you have such a low inflation rate. You would expect the inflation rate differential to again be the main determinant of the weakening of the currency. And at 3%, we don't see, the same 6% inflation, currency weakening occurring year after year. Put that in your assumptions. At 3% inflation, if we're able to achieve it, the rand will weaken maybe 1% or so, in any given year versus the US dollar, as opposed to consistently 5+%. Okay. Next, moving on to, like I talked about, the chip sector. So, everyone here should know that NVIDIA is the most valuable company in the world. It was the first company ever hit past $5 trillion before pulling back. And what does it do? It makes chips. It makes computer chips that are used to train AI. Its advantage has been that it was the first to get into the whole AI space in a really big way. It's developed an ecosystem that allows developers to more easily use their chips than other people's chips. So even though sometimes you'll find a chip made for an AMD or someone being quite good quality in terms of the benchmarks and so on of comparison to the NVIDIA chips, NVIDIA still sells more because people are used to using it, and the ecosystem of their chips is better. But what's happened in the last couple of years is that the US government, especially since Trump has taken over, has restricted the export of these chips to China. NVIDIA first got an export restriction a couple of years ago, developed a new chip that actually lived up to what the export restrictions were saying. Then the administration changed it and said, no, even the new chips are too powerful. It wasn't totally arbitrary. What had partly happened was the technology has changed, and certain aspects that we thought were essential were not quite essential. And certain aspects we thought we could let go, or the US government could let go, became more powerful. And therefore, if you made a chip that, for instance, imagine a car. There's two things to a car. Maybe there's how fast it takes off and what the top speed is. Initially, when the two things were designed, you thought the top speed was more important. Okay. Later on, it found the technology really made the difference was how fast it took off, and that you had to obviously change your restrictions, because obviously, if you give a company a restriction, like say, limit the top speed to 100, but have as much acceleration as you want to, up to that 100, they'll crank up the acceleration to the max. Later on, it determined that acceleration was more important than anything else. You've got to change how those chips are made. That's basically what happened here. But I've argued this in the past. China is not like most countries in the world. It's a massive manufacturing hub. And whereas, for instance, if you want to put a chip export ban on South Africa, there's nothing much we can do about it. You do that to China, and in 10 years' time, you have a massive competitor in your chip sector. And if you basically do that to China and a whole bunch of other countries as well, you basically have handed over all those countries to the Chinese chip ecosystem. And we have started to see that happen right now. So a company called More Threads was listed in China this week. On listing, it went up like 4 times in valuation. Look, it is probably more to do with hype than anything else. I'm not adding it to my AI portfolio at the moment. It is what they would term a second-tier manufacturer. Huawei is the big guy out there with another company in China. I don't think this company, More Threads, is going to basically take that leadership role anytime soon, but it does show that the Chinese are working in this area. What the Chinese really need to do, however, is develop something not as a rival to NVIDIA, but a rival to ASML in the Netherlands. You develop a rival to ASML and to a certain extent TSMC, which is I think the secondary important target. And then developing a rival to NVIDIA will be much, much easier. And I think that is maybe a bit still further down the line. When China has come out with surprisingly good results with regards to chip manufacturing, it has often been found that they've kind of, inverted commas, kind of taken or gotten, or acquired rather, ASL machines without the normal regulations behind it. And so when we see a Chinese, chip innovator come out and really start using Chinese-made machines to make them, I think that's when we're really going to see a big shift up in the sector. Okay, that's it for this week. Thanks for joining me. I look forward to speaking again next week. Cheers.